Hey, by the way, big 2024 surprise story also has been, at least the last 3 months, the rotation trade, right? Utilities, real estate, industrials, check this out. They are just rocking. They're leading the way right now. And, well, this is the way they expect it to keep going. But I got to tell you, my next guest says that this rotation in the market is actually causing the death of diversification. I want to bring in Landsberg, Bennett, Private Wealth Management CIO, Michael Landsberg. And, Michael, I thought it was a profound statement, but you're saying that there's a different kind of diversification. I'm going to bring this up for the audience. So there's a diversification based on themes and a diversification based on sector diversification, right?
Absolutely. I think what people are confusing is they'll say, well, we've got utilities, we've got industrials, we've got REITs, and they're all AI related. Having a data center is not really a real estate play, it's an AI play. Having a utility strongly tied to data center growth or industrials that are electrification, those aren't real industrials. And it shows up in the correlation. It showed up in the first 2 months of this quarter. July and August, when tech was not doing well, a lot of those correlated to AI type utilities and REITs did poorly. And that's what we're looking at. We want to have the diversification, meaning what it was to lower risk.
But having said that, though, will the funds go to these other areas, though? I mean, to your point, we've got an excuse, particularly utilities, right, because they're a traditional safe haven. They pay a wonderful dividend if you're coming out of, say, for instance, money markets, and you get the added kicker of the electricity crisis. So, will money be able to budge out of these areas, even though they may be overvalued on an absolute basis?
Well, I think so. I think my issue always with investors is if you've got a 30 or 40% allocation of tech, and then you're adding all this tech exposure on top of it, you probably have 60 or 70% tech. There's not a problem to take some tech off the table, if you will, and add data centers, add electrification on the side of it, and keep your allocation normal. I do think there's obviously a play for real estate and utilities. As your guest talked about rates coming down, you're going to see money market rates going down. Getting some utility or REIT exposure, I think, makes a lot of sense here because we'll be able to see increasing income coming to clients.
Michael, I got some of the recent ideas up. I think you actually shared these with us last time. Let's just talk for a moment. Gallagher, I don't think a lot of people are familiar with even though it's a well-known insurance name.
It's an insurance broker. And so, Charles, what I like about the story is, your previous guest talked about the services number. What's been interesting is inflation in insurance has been double digits. It still hasn't come down. It was north of 20. Now it's in the high teens. Well, that's really good for brokers. They make a ton of money because a lot of this insurance you have to have. And so Arthur Gallagher does a lot of business with a lot of different companies. And insurance is one of those things that as prices go up, their margins seem to go up. So we think it's a good place to be. I don't see insurance premiums coming down, specifically in property and casualty, given what's happened with the storm. Right. That's probably an area you want to have exposure to.
So right before you, Phil, thinks that the China play is a trade at best. I think, though, you'd like it longer term. We've got three names here. And it's intriguing to me because you've got one Chinese name I'm not familiar with. Obviously, we know Hermes and Wynn. Wynn, I think, was the number one performing stock in all the S&P 500, get maybe 70% of their business. So there's a way for Americans to play this without necessarily having to even dive into the Chinese market, right?
Absolutely, Charles. I'm not a big fan of owning Chinese stocks. I'm not a big fan of the Communist Party. They changed the rules. A few years ago, if you remember, we had a great story with the education trade there. They just decided to change the rules arbitrarily. So I'd rather play 2 or 3 stocks out of the country for every one you have in China. Wynn, obviously, they're a VIP scenario. Like you said, 65% of their revenue comes from there. Hermes is another story. You get business in China with their 30 stores, but you also get a lot of business from the Chinese traveling all across the world. And there's a lot of margin in $12,000 handbags. So we think there's a good spot for Hermes to continue to make money.
Yeah. All right. Hey, good stuff, Michael, as usual. Thank you very much. Let's talk again real soon.
My pleasure.
All right, folks. We're rich. I mean, we're very, very rich.